What's up, everybody? Joshua Salvetti. Today we're going to be breaking down the live weekly webinar recap for the High Performance Trading Discord. Right, our goal during these recaps, right, is to really not only to break down the week and the trades we took, the opportunities we're able to identify, the mental recap, all that, but as well, it's really important to how do I want to say this? Adjust our strategy or make mental notes of what's working, what's not, right, and other ways to improve as the market continues to adjust, right? So I really want to break down today the risk reward concept of trading, right? Because I noticed the last couple weeks, right, I've been taking some trades and I really want to dive in today entries and targets, right? Where are our targets? What are our expectations for targets, right? And where to stop out, why to stop out, where to trim, why to trim, right? I think there's a lot of stuff we need to unpack in that topic, right? So me and Darren were talking last night about targets, entries, exits, and kind of, just ways to adjust our taking profits and what really constitutes taking profits and when to take profits and when not to, right? So I really want to dive into that today.
100%. And I think these Discord recaps are super valuable so that when we can come together, we can show our perspective of maybe how we viewed a losing trade
Right.
or how we viewed a day that was really frustrating. And by looking at it from those different angles, we can figure out, okay, this part of the process, I didn't have quite right, and figure out, what is the core part of the philosophy, because we have found this philosophy that we can fall back onto, like we do not have to strategy hop. We don't do that anymore.
Right.
But what we can do is find these tools which can slowly sharpen our edge. And we have to know when to use those different tools at the right time. And it's obviously very complex. There's a lot of moving parts, but we always need to know what part of the strategy we can fall back onto that has our back, and that is our market perception. And we saw that this week, and there might be different parts of the process that we need to refine, and we're going to get into that today.
Yeah. Perfect. Exactly. Right. Well put. It's like I like what you said there with strategy hopping. Right, like we're at the point where we don't do that anymore, right? Because just like you said it's your perspective of the market, which is your edge, right? Like our job is to identify high probability, great opportunities that the market presents to us, right? So it's like once you're in a trade and say it's not going your way, right? Just because it doesn't work, that's not saying your strategy's bad. There's millions of variables. So yeah, I really like how you put that. It's not a question of strategy hopping or trying something different. It's a matter of when do I identify that entry? What does the entry look like? And what's our risk reward ratio, right? What really does that mean? I remember my first couple years of trading, it was just like, oh, put on a trade and hopefully it goes my way. And that's not the proper perspective, because when addressing a trade that way, you're going to find yourself in scenarios where you do I take profits because it feels good? Do I take profits because I'm up 30, 40, 50, 60%? Or do I add, do I trim, what do we do, right? So this week definitely gave us a lot of opportunity. And I found myself holding the bag a little bit on some trades, right? So, going through my trade journal, I'm like, okay, I was in a trade, I was up over 100%. Let me see here. And just bear with me, guys, because I'm not that used to TradingView. But I mean, real quick before.
You're not sharing your screen yet.
Oh,
I just
okay.
wanted to
Th-
share that.
thank you, Debo. Let me pull that up.
Yeah. Yes, Thinkorswim's having some difficulties today, so we did some charting on TradingView, and that's where we're going to be breaking down the charts this morning.
Yes, sir. But yeah, it's like okay,
Yep.
because I'm really big on taking profits based on based on reason, right? Like within reason, I want to take profits, right? So it's like, okay, what happens when you're in a trade and you're up, right? So real quick, over here on Friday, I took a trade on QQQ, but I'm just going to break down on this quick example on SPY. This is the 3-minute time frame, and you can see here pre-market high was well respected. This is definitely a good entry, right? Why is this a good entry? Because you can clearly see here, right, that conditions are bullish. So when conditions are bullish, right, we want to trade bullish chart patterns, right? I literally like to keep it as simple as that. I used to confuse myself a lot, right? Like, do I go short? Do I look for shorts? It's like, no, listen, if conditions are bullish on 1 hour time frame, larger time frame analysis, if you've deemed conditions bullish, let's look for bullish chart patterns. This will help you trade with trend and catch much larger moves, and kind of reduce the anxiety of just trying to catch a quick scalp on a pullback, right? So anyways, we've identified bullish market conditions. Price rips above pre-market high, comes up and retests it, right? So this is a beautiful entry to take the market long. Now, as price, I'm going to whip out the 1 minute. So as price continues to move forward here, right, what is a good target, right? Like, what is an area you want to shoot for? And basically, the way I identify my targets these days are when in these current market conditions is on the daily time frame, right? So I'll show you guys where I got my target real quick.
This is SPY on Friday.
Yeah.
Okay, yep, I got it.
Okay, so my goal here, right? We had upside potential at the top of this wick. So what I'm doing here, right, is always grabbing from previous price. So before the market opened up, it looked like this, right? So I'm like, okay, if we can open above this wick right here on the daily time frame, which was at 432.82. I think that was the high right there. No, I'm sorry, 432.40. So if we could open and hold that level, that's what I like to call bullish market conditions. So if we could hold this level, I want to target this 434.08 and then 435.12, right? So those are my two main targets on Friday if we can hold this level. So once again, those are just my targets. I don't necessarily know how price is going to get there. I'm just trying to understand a clear target before entering a trade. So I marked it. There we go. So that's target, and then the close of the wick is also very important, right? So those are my two targets. Let me go back to this 1 minute. And once again, right, my goal here is to get away from just entering a trade and taking profits at 30% or 20%. So taking the market long here, off pre-market high retest, right? Hypothetically, say you went long. Once we ripped above pre-market high, we found acceptance above pre-market high, right? So anywhere in this vicinity, I would have wanted to take profit, or I'm sorry, hop in the trade. Obviously, this first candle here would have been, ideal. It would have been clutch. And what I love about this sort of entry is it takes a lot of confidence within your strategy, right? Because if you wait until maybe this candle to enter the trade, once again, you're now risking almost 70 cents here on a pullback, because your stop loss has to be where the conditions change, right? So when bullish conditions are invalidated, right, breaking below this candle or pre-market high, right, you have to be aware of where your stop out's going to be, right? So let's say you entered this trade on this candle, your stop below the previous candle or pre-market high, right? That's perfectly fine. And now your target's up here at 434.16, right? So that's your first target. And then you got a target above it all the way at 435. So now what we're going to do is enter the trade, and we're going to stay in the trade. And then once price starts making its way up to your target, what me and Darren were talking about, right? Now there's futures traders, there's options traders, there's equity traders on the team, right? And honestly, it really doesn't matter what you trade. What matters is you lock in your profits, right? Because one thing I've noticed within myself going through my own journal is that I'm not locking in profits on every trade where I should be, right? Because quote unquote conditions haven't changed to bearish yet. So I kind of got this philosophy, or I had this philosophy where until conditions change, I stay in the trade, right? And yes, that will help you hold, stay in positions longer, and kind of get you away from taking profits very quickly. But at the same time, I'm realizing there's a lot of times where I end up holding way too long and giving a lot of money back, right? Because like my initial stop out's down here, and let's say I've caught, a $2 move here, and then I find myself holding through this pullback, right? This is behavior we don't want to see, right? So what I'm trying to do now going forward this week is once I hit my target, right? Bought my options for $100. Right now they're worth 140, 150. I'm bumping my stop loss up to my target, right? My initial target. I'm not saying sell here, right? I mean, you could trim if you'd like to, but at the same time, the main goal here is to stick to that risk reward ratio. And that's what we're going to talk about today, right? To see consistency, right? You must stick to your risk reward ratio. This means I will never lose more than $30 a trade or per contract, right? 30%. And then I'm never going to and then my goal is to make at least a 1 to 2, 1 to 3 risk ratio, right? So that's $60, $90. And now, hypothetically, this example, we're saying by the time price rallies up into this target, it's at least a 1 to 2 profit ratio, right? So you've at least made on a $100 contract $25 to $50 on this move up initially, and then putting in your stop to lock in those profits, right? So once again, I know we're all familiar on this topic. I just kind of wanted to talk about it today because, as we grow to traders that trade these market conditions very well, right? And I think a lot of people on the Discord are starting to do that. I think we're starting to graduate from the take profits quickly, and now we're starting to, hold trades longer. And this may be something you're dealing with because I definitely see it in my trade journal.
Yeah, I think the important thing here too is, if you've analyzed this situation where you're expecting buyers to show up here because you're bullish, we've had whatever news, we've had pre-market high, we've had buyers defend low of day, this pre-market high level, and we're breaking up with strength. Like you identified the fact that there's buyers here, and now you obviously had your stop out for 30%, and you've already hit your profit target of 1 to 3 risk to reward. So now, you've analyzed correctly, you've hit your target. There's absolutely no reason to let that go back into a losing trade,
Right.
just for the possibility to make it an even bigger winner.
Right.
At very, very least here, you need to have your stop loss, not a trailing stop, a stop, just move up your hard stop to your 1 to 3 risk to reward. And then, at that point, then you follow conditions, and then you get out when conditions change from bullish to bearish. But there's absolutely no reason to let that come down,
Right.
and be less than a 1 to 3, because if that's your target and the 1 to 3 is what makes you profitable over the long term, then it doesn't make sense to let that go below that profit target just for the sake of getting a
Hopefully,
win.
yeah, hopefully getting that bigger win, right? Like, and this is just a clean example. And once again, guys, I seen this in my trade journal, right? Like I'm going through my journal last night and I'm like, I'm obviously checking up on the week. How profitable am I? How well am I doing? Like, where am I at? And that self-awareness is critical to becoming a $100,000 $1 million trader. I truly believe it. If you aren't diving deep into your journal, right? That self-awareness is critical, right? Every week, look at my journal. How are my trades going? What are some things holding me back from being a better trader, right? Like those beliefs and those behaviors is what's going to bring you to this point of going, hey, I realized in my journal I gave back, I don't know, X amount of dollars this week because I kept holding the bag, right? A perfect example is late day on SPY, right? So I took a trade on SPY. Real quick, I just want to break down another clean example here. I took a trade on SPY beautiful trade. Let's break down the analysis real quick. So we had this level right here. So price was coming up into 43480, and it was relatively bullish. Once again, bullish market conditions. We're holding. What I want to really point out here, the way I do this, and this really helps me stay in the moment, right, is when price is coming up to, it's just doing its thing. And right here, I'm like, okay, do I want to take a long or a short? And the way I do this is go, where does price need to go to invalidate bearish market conditions, right? And the way I do this is all structured. So price is coming up into 43480, because if I'm looking for longs because conditions are bullish, I want to first rule out where sellers can take advantage of price or of conditions. So what I'm looking for here is for sellers to defend 43480 and then price go back down. So if I see any selling here, it's going to turn me off from longs. But on the flip side, if we see strength here, right, this is going to validate my long analysis, right, my bullish analysis. And now I'm going, okay, I want to take a long play. So I end up taking the market long right there on the 4348. Once we could not get below this level, right? And now the reason I'm going long here is a couple different reasons. I had a 436 target, right? So that's about $1.25 away. At this time of the day, that pays pretty handsomely. And my stop out is very close, right? And that's that critical point analysis we're always talking about, right? So critical point analysis is where if I want to go long, where I'll know immediately if price breaks below 43486, right, and we hold below this level, that's a perfect way for me to understand sellers are in control of the market and my analysis was wrong. So I'm only risking a couple pennies here, right? On options, I'm probably risking 10% on my options contracts here to make a handsome trade to the upside. So it's like, once again, we've clearly identified that buyers were controlling this level and sellers were controlling this level, but at the same time, I'm willing to bet on buyers in this scenario because if sellers come in, I get to stop out very quickly. So that's kind of my whole methodology behind it, right? So we take the market long, and now we take price right up here into high of day, and then we start to hold, and now price continues to go up, right? So we're in a winning trade, we're doing well. And my stop loss is still, I bumped it up to around this level, right? This 435.15 level. And then price misses my target by about 20 cents, right? So here's 436. We missed the target. And I continue to hold. And then price actually stomped me out right here, right? So once again, I gave back a lot on this pullback. Right, and every trade's going to be a little different, but what I should have done was bump my stop loss up from 435.17 all the way up to here. That's going to lock in more profits, right? Because holding through all of this is not what you want to do. You know what I mean? I ended up holding through this, stopping me out, giving back around, I don't know, 70% of my trade or profits, probably 50 to 60%. And this whole move, I ended up locking in 10% profits. So it's like, just be aware of this. Like, I don't know if you guys are going through this. I just really wanted to bring it up today because holding through these pullbacks, yes, it's worth it, especially if it's earlier in the day, right? Like if you're up here, and obviously every trade's different, right? And you're going to need to be able to evaluate that. But if you find yourself in a trade around the end of the day and you're an options trader at that and time decay is eating away your profits, you got to pay attention and you have to lock in your profits, right? At no point should you be up 80% and only lock in 10%, right? So that's just something I wanted to address.
Oh, that's about around the time I think I sent you a text. I think.
Oh, what, on the short play?
Yeah.
Yeah, 100%. 100%. And that's the thing, right? It's like when you're in a trade, right? This is also what me and Darren were talking about. So when you're in a trade, right? Let's bring it back to the whole mental capital, right? So when you are in a trade, it is extremely hard to remain objective, right? Meaning it's extremely hard to not have tunnel vision, right? So once you are in a trade, right? Like Todd texted me, he goes, "This is looking like a quick scalp for our for a quick short play," right? And it was beautiful. So the fact I'm in a long, right? I'm not really able to be objective to the point where I can be like, okay, let me take profits quick and play a short, right? Because when you're in a long position, all your mind is focusing on is green candles, right? Or when you're focused on red candles, right? You're more focused on the green ones. You wanna see more profits. So it's like it is extremely valuable to be able to be in the moment, right? Without tunnel vision, objectively. So holding on to trades, yes, it's important. I love holding on to trades. It's one of the best things. But at the same time, there is a point. It's a fine line, right, where you're holding way too long and you're giving money back. And not only are you giving money back, but you are now subjective, right? You have tunnel vision, because that tunnel vision is a very real thing, right? We're constantly, when we're in a trade, it's very hard for us to look at other scenarios correctly. So once again, bringing up that hard stop is going to lock in profits. Let's not put so much significance on these 100%ers, 200% returns, right? And now let's lock in those profits. We could always re-enter, and just once again, just remaining objective and not having tunnel vision is just as valuable as profits, if you ask me. So
Yeah, I remember us talking about this yesterday, and it's something that I never really thought about, because we've talked for the longest time about the importance of holding on to winning trades and, actually paying ourselves. But the thing that I never realized was, if we're holding on to trades for hours at a time, where sometimes that is warranted, like it
yes,
definitely is.
right,
There's times when that is necessary, but all of that time you're perceiving price action with a trade on, so you naturally have a bias. If you're long, like you there's a reason you're long. You have money and you want the market to go up,
right,
and the problem is now you're perceiving price action with that bias. So you get so used to looking at price action with a bias that you almost forget how free it is to be
right,
receiving price action without a trade on.
right,
And actually, that's the best place to be in.
yeah,
Because you're going to be the most objective.
and present,
So,
yeah,
so just I think it's important to be aware of it. That shouldn't be reason to trim profits early. Obviously, you need to have your risk to reward ratio in the forefront of your mind, and if your risk to reward ratio is not satisfied, then you either have to get out of the trade or wait till your profit is hit. That needs to be, in the forefront of your mind.
yeah.
But just preserving that mental capital, I think, is super important.
Yeah, a clean example of that, right? We've all been there. Have you ever been in a losing trade and you're like, oh, it's gonna come back. Oh, it's gonna come back. Oh, there. Oh, nope. And then, like, next thing you know, it's 3:30. You just lost, 70% of your position, and you're like, and then you finally exit and you look back at the charts and you're like, what was I thinking? Like I was holding the short right here all the way, you know what I mean? I've been there. I traded like that way for years. And once again, that's that tunnel vision. That is and know it's crazy, and I don't want to get too far off topic, but when you do that long enough, right? Like, another thing I want to dive in today is the difference between trading for money and trading for excitement, right? This is critical. We're going to break into this later because this is extremely important. When you trade, let's just say you've been trading 3-4 years, 5 years, maybe even 1 year, doesn't even matter, and you've become so used to the thrill of getting in a position and that feeling it gives you, right, at 10:30 when you're in the market, right, and you get this excitement, right, your body actually starts to become conditioned to that feeling, and now instead of trading based on your knowledge or trading based on your objectivity, you're now trading for excitement, right? And I see myself doing this every once in a while, and becoming aware of this is critical to get past it. Because, yeah, we could sit here on a webinar and talk about the perfect trades, but if we're trading for excitement, right, you're never going to be able to trade your trade plan, right? So it's another thing I want to dive deep into. And trading for money is way less fun, right? It's way less, right? Because any trade I take, it's not like, I mean, real quick, this is a perfect example right here on Thursday, right? So Thursday was a very, very good. I had 2 trades this day, and it's some of the best trades I've taken in a long time because of how aware I was of price action and how I was able to capitalize on this, right? So first things first, we have pre-market high, right? So pre-market high is critical this day because you can see price rallied off the rip, and this is a main reason why I do not like to chase. I do not like to chase. I don't want to label it as I don't like to take morning trades because that's not the case. The plain and simple, it's I do not like to chase price action, right? So when this is rallying like this, I do not want to get in, right? I don't care if this thing rips all the way up to 429.50 or my target. I'm not chasing this, right? Because 9 times out of 10, you're going to get a pullback, and all these impatient traders here that chase are going to get eaten up. Right? So anyways, this is why we go back to structure. This is why we focus so much on open print and pre-market high, right? So price rallies, comes down, tags pre-market high. So at this point, QQQ was selling off below open print. QQQ was really bearish. So this kind of strayed me away from just taking the market long right here. On the flip side, what I was doing was identifying structure. Because I'm like, if bearish structure here can hold, I might be open for a short play, right? So, once again, instead of just chasing this off the rip, I play the story, right? I want to see what the market paints. I want to see the story it's painting, and I want to trade based on the story. So price rallies right up into my short level, and I do not take this short because we're well above open print. Pre-market high was respective, and conditions were relatively bullish, right? So now, but once again, just because I've identified an area being respected by sellers doesn't mean I have to take it, right? I'm letting the story play out, and then price comes down below. My next critical level at this point is pre-market high, and I want to see what happens here. And initially, I was looking for a short play. So we come below pre-market high, and we start to hold below it. Now, there's a couple different things happening at this point. QQQ was respecting a critical level, and this is another reason why we wait for that retest too. Like a clean retest at this level is going to show you, it's going to speak volumes, because we don't get a clean retest. Instead, buyers defend this. Now, this is what I call present moment price action. This is something you cannot predict in your pre-market plan. This is something that you can only be aware of in the present moment and capitalize on, right? So this is where we want to be. This is the person I shoot for every day, is the guy that could see buyers taking advantage of this bearish scenario, right? Closing below pre-market high, bearish. Bearish structure formed right here, bearish. Buyers invalidate all that bearishness on this candle right here. Once we closed above it, invalidating bearish structure. Now, this is how I find 100% of my trades. This is the type of way I want to trade every day. Is once you can identify this is when I called the trade out in the Discord. It hit me like a ton of bricks. I'm like, this is a long play. Once again, another reason why this is such a good play is because your stop is so close. You have super large upside potential. I mean, our upside potential, I think it was like 29.5. It was super far away. It was like a $2 move. 2.5. So, once again, completely aware of bearish market conditions, aware of what the story is, and then aware of it getting invalidated is a clean, super, super perfect spot to enter the trade long, right? Volume came in, and then the rest was history, right? So price just, it rallied. And, as conditions start to change and we get these large gap ups, you're going to see large money playing this game. Large money's goal is to liquidate you, me, and the whole world so that they can catch these massive moves. That's why it's so important to be patient, especially in times like this, right? We've seen a lot of bullish market conditions, and you have to be careful trading against trend, because this right here is the sort of stuff that you're going to get caught in. And every time I see stuff like this, it's super clear to me. I'm like, oh yeah, this thing's gonna rally, because all these sellers that just got trapped right below here are gonna provide tons of liquidity and buying pressure to the upside, and then price just continue to rally, and and once again, here's another liquidity grab, right? So this goes back to what me and Darren were just talking about. So I ended up stopping out all the way down here on this trade, right? Because I didn't bump my hard stop up. Now, yeah, did I lock in over 150% on this trade? Yeah, it was phenomenal. But at this point, I was up almost 230, right? This is almost a $3 move on SPY. It actually is. So a $3 move on options, this is hefty, right? There's no reason to give back 110% because you, and don't get me wrong here. I'm a big 1 hour time frame trader. Now the 1 hour was still speaking extremely bullish, but does that mean I need to hold through this pullback? Absolutely not. That means identify structure, and this works very well with futures. And if you are an options trader, pull up the option chart on Thinkorswim and just pull your stop loss up, pull your hard stop up. And what this is going to do is prevent you from giving back here on these liquidity grabs, right? Because these are going to happen.
Yeah, I would recommend moving your stop up and not doing a trail stop.
Yeah.
I'm guilty of doing a trail stop.
Yeah.
I've done it a lot, and I basically just realized that, it's so much better to do a hard stop.
Yeah.
A trail stop will knock you out
Quick.
early,
Yeah.
just about every single time.
Yeah. Yeah, like basically, I've put in trail stops before for like $10 plus or minus, right? And then, when your contract's ripping and it's went from $100 to $250, that 10-cent pullback is literally 3 cents. It's literally like 10 cents. So, and as your contracts become worth $200, $300, $400, you got to think a trail stop. Maybe you should. I would avoid the trail stop as well.
Don't do it.
Yeah,
Don't
just
do it.
all together.
We're trying to capture moves where there's high volume, and when
Yeah.
there's high volume, that means that the volume
Your premium. Yeah.
is fluctuating like crazy.
Yeah.
And so it just doesn't make sense. It's not very conducive.
Yeah.
Yeah.
And then another trade I ended up taking this day, right? This 1 minute is throwing me off. We're gonna go to the 3 minute, because this next trade I took was this was one of my favorite trades. I was very, very happy with this trade. Okay, so once again, we took a beautiful long play. We got stopped out down here. Okay, on to the next. So now, once again, this is bearish. We've well, on considering this quick little lower high, right? This is bearish structure forming. Now, once again, where do I look for? I'm looking for price to be invalidated, right? So bearish structure is forming, and we cannot get above this double top. Now, once again, I got to go back to the 1 minute because it shows it just a little better. This
Can you not create a 2 minute on there?
I probably can.
Or is that?
I just don't know how.
All right. It might be a paid thing too.
Yeah.
Yeah, it is.
Okay.
It is? Okay.
It's all good. All right, so let me see here. Okay, so once again, this right here, as bearish structures forming, and the 1 hour was just super bullish, and I use the daily time frame as well, and this will keep me from these bear traps, right? This is what I call a bear trap. You go short up here, unless you're taking profit in like three seconds, which I don't really I wouldn't recommend trading. And this is just me. Scalping has not been my friend. Scalping has been a very, very I don't know. Anyways, what do I need to see here to invalidate bearish market conditions? So I'm letting this play out a bit, and when in doubt, let it play out. You know what I mean? There is never any point that you need to put on, like, and that's another thing, right? Like, going back to being conditioned, right? We've been trading so long. If you haven't put on a trade by 10:30, the other day, right, we had no setup by like 11:30, and I literally needed to remind myself that you do not, just because it's 11:30 and you haven't put on a trade doesn't mean anything. Like, you do not need to put on a trade just because it's 11:30 and you missed the morning trade. I think I even said that in the Discord. It's crazy how our body becomes so addicted to the thrill of trading, where if it's 10, 11, 12 and we haven't put on a trade, we start to feel uncomfortable, right? Just become aware of that and be like, dude, listen, I don't need to put on a trade right now. I only trade when I understand the story, right? And right now, I'm only trying to trade these aha moments, because these aha moments right here, they pay. You know what I mean? You captured these moves right here, right? And these may happen only once, twice a day. You know what I mean? So if you're trying to capture these moves, you might go a full day without even trading, and that's okay, right? Just like, become aware of that. So anyways, I called out a trade. It was literally, I had a perfect entry, and I was able, the 5 minutes what did it. But basically, the way I was doing this here is bearish structure was forming, right? So I wasn't looking for a short play, but what I was doing here was going, where does price need to go to validate sellers aren't in control? Prove to me that sellers do not have it. And that was this 42844 level, right? So you could see this was that liquidity grab, right? Massive volume. And then we came up, we made that lower high, and now we're forming bearish structure. So right here on this candle, once it pulled up, I was like, you know what? I'm going to put this trade on. I'm willing to put on risk right here. Sellers did not have it. They couldn't hold it. I put my stop loss below 428, below the candles before it. And I'm like, okay, I'm willing to bet that since sellers couldn't get below this level, that buyers are in control, right? And once again, this is something you're not going to be able to see in pre-market. This is something you can't plan for. This is something you just see. This is something you just understand in the present moment that's going to help you trade with conditions, right? So that was I was so proud of this trade, because, and looking back, it's simple, but some of the best trades is if sellers, right? You get this seller, like, be aware of the tricks large money's going to play. That's all I'm trying to say. It's like, yes, a lower high. This looks bearish, but it couldn't break that level. So if sellers couldn't break it, I'm going long. And then I put on a long, and this thing just really started to rally. This was a really good trade right here. So once again, where on the chart does price need to go to invalidate bearish or bullish conditions, right? And Mark Douglas talks about it. He calls it the area on a chart where buyers, where buyers' beliefs are reinforced and where sellers' beliefs have been completely crushed. Like that moment you're in a short play and you realize you were wrong. You know what I mean? That's the moment I'm looking for every day to put on a trade, right? Like if I was short right here, right? Say I was short and I was targeting, I don't know, like down here. At what point would I have just finally realized, like, oh man, I'm done? It was probably would have been right on this one of these candles right here, where you couldn't break below it, and so yeah, it's just that critical point. I love looking for it because it speaks really well, and then price just really rallied here. So.
Yeah, Josh, do you want to go over that other aha moment that we found on Wednesday? On Wednesday, I believe, with that little head and shoulders.
Yes. Yes.
of exactly what you're talking about. Same scenario.
Yeah.
Same aha moment, but just a new price action and
Yeah.
a new way that we can kind of explain
Yeah.
that topic because we haven't really talked about it before, but I think it's really crucial to
Yeah.
go over it.
100%. Like, and what you'll start to realize is you can see these everywhere. You can see these everywhere. You just gotta know what to look for, right? So I'm at the point in my trading where I've taken so many losing trades. Like, say I took the market short up here, right? Which would have been validated. This was bearish, right? This looked extremely bearish. I didn't because we were holding over a daily time frame candle. But say you took the market short here off open print retest, right? Now, at what point would you have realized you screwed up? That's the point you want to go long, right? I mean, this would have been a pretty early point, but still, if you were short right here, you would have realized right here you were dead wrong. This pullback and now that's how I was able to call out this long play, right? So I went long right here on this candle, and the reason I did is because this right here invalidated bearish market conditions for me, right? This right here is one of the aha moments. We're going to talk about another one on this day, but this is just another way I was able to realize conditions were bullish is where I realized conditions weren't bearish anymore. You know what I mean? So it's like this is a good short. Now it's not a good short. So that's the story. That's what we're looking for every day. That right there is like, okay, buyers are here to play. And then price continued to just rally. And now it's like, okay, open print was respected. Pre-market high was respected. And once again, look at pre-market high, right? This looks bearish. And then buyers come through. Boom. Right? So once again, once buyers, so say you missed this entry, and then you've seen this, right? And you would have been like, okay, invalidated. But say that even went up too fast for you. Came back down. Boom. This is another beautiful entry right here. So it's like, at what point is bearish market conditions invalidated? Now, this one up here we're going to talk about is a perfect one for where longs are invalidated. So we took this price up. Price went up. I ended up stopping out on this candle right here because bullish conditions were invalidated, right? So that's how I like to trade. It's like I play structure all the way until it doesn't hold anymore. And now I kind of...
That's a great example right there.
Yeah.
Out of the trade, by the way.
Right.
Great example.
Boom.
Not holding it too long.
Yeah.
Trimming it as close to the top as possible. You know.
Yes.
Could have been a fake out. Yes, maybe, but that's perfect criteria to get out. I like that.
Yeah. That's the goal. That's my goal every day, right? Yeah. Not attached. And I don't care if my target's up at 442.50. It doesn't matter, right? This right here was a monster trade. There's no reason to give back 80% on this trade. You know what I mean? And so it's like, okay, just keep bumping it up. Boom, stop through. So once again, at this point, I realized going long isn't the best option. So now, right, so once I'm out of my trade, the way my mind works is, okay, do I want to get back in longs? Do I want to get in shorts? What am I looking for? What's the market telling me? Right? And at this point I go, okay, if I'm stopping out of a long, it's probably because other people are stopping out. Maybe conditions are changing. And then I'm like, okay, so obviously I have a couple levels here, right? I got that left, this 42164, and now I go short. Okay, so this is what I call it yesterday, Darren. This right here is chasing. This is fear of missing out. So I go short at this level, at 42138, 39, or 42140. Now, was it the worst spot to go short? No. I mean, bearish structure was forming. I was looking for a lower high. Okay, so I took the market short. Now, the only thing I didn't account for was this pullback. So, because I'm not going to go short right at the top here, I end up going short at the end of this candle at 42117. Not the best spot to go short because of this support right here, right? So it's like, you got to weigh that, because and now this is another example of trading for excitement, right? So when you're trading for excitement and you've conditioned your body to be excited and thrilled when you trade, you're going to take dumb setups like this, right? Now, the reason I'm calling this setup dumb is because my stop out is it's about 60 cents away, right? And I don't like to risk more than 30%. So I'm putting myself in a dumb scenario. You know what I mean? This is not ideal. I shouldn't have took this trade. And know what's crazy? What I just noticed, Darren, is I stopped out on this candle. Look how quick I was to get in another trade, right? It's like once you've conditioned your body for that excitement, for that thrill, right? You tend to make unlogical decisions, right? Like I was okay here risking, knowing damn well price could go right back up to 42163, maybe even 42194, and I wasn't willing to accept that risk, so I put myself in a bad scenario here that cost me money. Price immediately.
Probably overconfidence.
Yeah, that too.
Overconfidence.
Yes.
That euphoric feeling, by nature, we feel literally invincible. We
Yes.
feel like we cannot fail. We feel like whatever we attempt, we're just going
It's gonna win.
We're just gonna, it's gonna work out. We're gonna achieve it.
Yeah.
And this is why Mark Douglas says you always have to monitor your susceptibility to falling prey to these trades.
Yeah.
And that basically means, if you just came off a hot winning trade,
Yeah, right here. Yeah.
you realize that you have potential to get into something without full confirmation.
Yeah.
Because you're overconfident.
Yeah.
But I mean, I still think this is a great entry. The only thing is, if your risk to reward can withstand a pullback all the way to that high there at 422 something.
Yeah.
Then you can get into that trade.
Right.
If your risk to reward will not tolerate that, you can't get into that trade until that risk right there fits within your risk to reward ratio.
Right.
If it never gets to that point, you're not in that trade.
Yes, that needs to come first, right? Like yeah, this looks bearish. Now, just because it looks bearish right now, right? And honestly, like this level was well respected once, twice. It still wasn't broke. This is on the 1 minute time frame too. If I had the 2 minute, it wouldn't have. It still wasn't that bearish. I could have waited. But once again, I wanted, just like Darren said, you just came off a banging trade. You're like, okay, what's next? And I'm not saying don't do this. I'm just saying be aware. Am I taking this trade for excitement, or am I taking this trade to make money? Just the awareness, right? So anyways, price rips up because you have no idea this was going to happen. Stop me out on this candle by literally $1. By $1. And then we got the beautiful sell-off, right? So it was like, once again, it wasn't. And now, what I ended up doing, I can't pull it up, or I could. So now that I'm mad, right? Because right now I'm mad. I'm pissed off at. I'm pissed at SPY. I just missed a banger, right? I just gave back like 30, a pretty hefty amount of my. I took a losing trade, 30%. It hurt. So now I'm mad. So now what I do is go, all right, I'm gonna trade QQQ, and let me pull it up because. Once again, it's just you got to just be aware of the mental game you play with yourself. Because that awareness is what's going to help you grow so much. That was Wednesday, right, Darren? Was that? Yeah.
Yes, it was Wednesday. Yeah.
So now I'm like, okay, I'm going to trade the pullback on Qs, which Q had way more buying strength than SPY. So then I take a trade on QQQ. Pretty good trade, but at this point, if you're not getting in up here, conditions been extremely bullish. Is this a bad trade? No, right? Like I'm not even trying to say that, but I'm just saying right here I went short. All right, I actually went short at like probably it was like this candle, right? This thing like
HPT.
yeah, I went short on this candle right here. Um, boom, okay, and then I didn't, and now this goes back to exactly what we were talking about earlier. Just hit like 170% trade earlier. Then I got quote unquote I robbed myself on my second trade, right? So now my mind is literally programmed for a trading error. Like because now after hitting a trade for 178% and then getting robbed, quote unquote, now I enter the market short. Oh, I'm sorry. I didn't enter there. I entered right here, guys. Hold on. This thing's the time frames are screwing me up. So now I make a dumb trade right here. I should have been patient, Todd, and entered over here, but instead, because once again, chasing. Look at dude, this was 3 minutes after I got robbed. Couldn't wait. Had to make another trade. You know what I mean? Like, let's get back in, right? And I end up hopping in on this play, right? And then, it went my way. Not the worst play, but this is the thing. I didn't get in right here at the top. I got in right here on this candle. So at 35370, right? So I'm about 30 cents away from the proper entry, right? And now, so this is what I call chasing, right? This is chasing a setup because you just missed a trade, right? So now I'm like, okay, I'm taking this trade right here. This thing, I can't move it. It's all good. There it is. Okay. So now it starts going my way, and I'm holding, structure. Right. I should have just got out right here. When it broke my structure for a 0 loss, but instead, I'm like, okay, I'll hold up here, which I'm not. I'm not saying it's bad, but when you chase a trade, it is bad because now you're approaching the scenario out of lack. You're approaching it from a not an abundant state of mind, right? You're approaching it out of I need this to work to feel good, dude. This wasn't even for money. This was for complete excitement. This was for complete thrill. I mean, look at this. This is not a good setup. This literally happened. I had a ripper, got quote unquote robbed myself up here. So now I'm chasing that excitement entirely. Enter a bogus trade, and looking back, it's still super bullish. I mean, look at that perfect retest off structure. Comes up, stomps me out right there. Boom, 30% loser because of just of a stupid for chasing, right? So it's like, but now look how this works, right? It's like, okay, at what point would it have been a good place to get back in oh, never mind. Because then that was when Powell spoke. But once again, guys, I just want everyone to be aware of this, right? Like, I'm not saying, like, when you hit a slam dunk trade, right? Like, just be aware of the excitement. Be aware of the thrill. Be aware of that emotion, that conditioning that our bodies have gone through for trading for years. Like, I mean, I don't know about you guys. I've been trading for about 5 years, a little longer. So it's like we get used to these feelings. And looking back, it's so crazy. And I hope you guys do this in your journal. Because once you're aware of it, now come Monday, if I take a losing trade, I'm walking away. I'm getting my head right because I'm aware. Once you're aware, the consciousness opens up and you're able to reassess the scenarios. You know what I mean? So,
Yep, this is the importance of having a clear mind when we're trying to read price action. And whenever you get into a trade like this, and man, I've done it too, your mind is skewed to the point where you can't accurately assess price action, and a lot of times you're coming from a place of scarcity. But this was the Powell day. This was the big day. So I mean,
yeah.
it kind of made sense that price action is a little bit goofy. I actually didn't put any trades on this day on Wednesday because I was super busy, but also the fact that this was going on.
Yeah. I ended up taking a quick short play off Powell's speech. I don't really recommend trading this way, but
Was that the day that it rejected opening print? I think it was.
yeah,
It
perfectly,
was.
dude. This
It was. That was beautiful.
open print that was on Spy. Let me pull up Spy. It was insane how well open print held on this day, and it just it really speaks so much about our just our edge and being able to and what a critical level actually stands for. Because if Price can rip into open print, psh, hold on, let me find it right here. Look at this, dude.
During a Powell speech,
With all that volume.
yeah, and still be defended. I mean, that's a pretty robust level.
Well, look, it was
So I think it's 419.20 I had on
yeah,
Spy on Wednesday.
yeah, I got it right there. Look, once. I mean, perfect. So, the way I caught
I did not take that long, by the way.
yeah.
If you did, and
If you did, you're an animal.
it's risky. It's extremely risky. You gotta have balls of steel. But I mean, I just look at it and I marvel at it because
Yeah,
it's just beautiful to see.
yeah. Seriously, I'll show you the trade I took. If I could. Okay, there it is. So the trade I took here, it was super quick. I was watching this 42159 level, the same level that got me before. And then I was watching this 421 area. So I really don't recommend trading this way, unless you're. This is how I like to scalp. So price rips right into this level and starts to reject. And then once we made this lower high right here, I was willing to put on a short play with a very tight stop above these candles, anticipating that 421 was going to snap. And that was how I traded. I took it short right into open print, and I think I got out on this little pullback. So it was a super quick, you know what I mean? And yeah, that was
That's a nice trade, man.
yeah. Well, and know what I like about this trade right here was it was all storytelling. This was all storytelling. This was if price can't get past 42160, and then you get that lower high. I'm anticipating this short, so I went short right here on this candle, maybe even this one. Or yeah, no, it was this one. Stop above these candles, and this thing paid quick.
Risk reward.
What?
Reward was great on that.
Yeah, and like I love that you say that, Todd, because it's so important to like we're traders. Our job's to identify, adapt, right? Like identify a story and adapt to it. Like and adapt literally stands for risk reward. Right? Like we identify the story, then we put on risk reward. That's our complete edge. And that's like, and this is this like a nice break and retest trade? No. This is a reversal play. 100%. And these aren't trades I like to take, but at the same time, if my risk reward's right, it's not a bad trade. So, yeah, I caught that quick move, and then yeah, it ripped right into open print beautifully, and then just soared for the rest of the day. So, really good. Now,
Beautiful. I could go over a trade on Monday, which is exactly what we're talking about with this risk to reward thing.
let
And
me.
basically,
Yeah.
basically some greed catching me.
Spy,
Tuesday,
Darren.
yes. So it's Monday on Spy.
Okay.
Yep, Monday on Spy.
Oh, we got a
And
nice.
actually, we had this previous day high playing.
Oh yes, let me mark
So,
that. Let me mark that.
my
Oh,
previous day high, 414.60, I think it was.
got it. Oh yeah,
And
beautiful.
and so And so, okay, so you know how we always talk about pre-market low on a Monday morning being like a critical level?
Yeah.
I had pre-market low at 412.41.
Okay.
Okay, so I had that marked, and then I also had previous day
Wait,
high.
wait,
Now I
wait.
also know that.
You had
Oh, sorry.
412.41?
You see on TradingView, you right there, bam. Wait. Sorry,
412.60.
412.41.
I got 412.61 right there. And
Okay.
that's post market from the previous day. Um but it's still
Okay. Anyway,
yeah.
it
Yep.
still gives you the idea of where
Yes.
price. So I basically made a play. So I know that price action on a Monday tends to trade within Friday's range, or at least there's a high probability that it will, or it will at least try to at first. Okay. So this is just something that I've crunched the numbers. So these are all the things in my mind. Now we fail to hold previous day high. All of the buyers that got in at that retest
Yeah.
of previous day high are now stopping out because they
Yes.
realize,
Cri-
price came back.
critical
They
point.
get they get back their profits, and now we're doing a perfect reject off the bottom side of previous day high. So
Yeah.
that was a beautiful setup for
This
me.
one right
That's where I
here.
got short.
Oof. Beautiful.
Yep, that little retest right there.
Okay.
Um, and we had that GBI right there. So
Yeah. Right here.
if you look just before,
Oh.
no,
This one.
before,
This one.
bam, right there.
Yeah.
So all those buyers right there that are trapped, they also get their money
Look
back.
at dude,
So
look at
anyway,
that. Look at that. Okay. Oof.
yeah. So that's where I go short my targets, pre-market low, and I did not take profits there. I didn't take
Ah.
profits.
Ah.
And I honestly don't know
Oh
why.
my
Could have been
lord.
greed. I really thought we were getting down to end of day. Somehow I told myself that
Ah. Yeah.
we needed to hit
Cause
that
it
end
was
of
it
day.
was a gap, wasn't it? Yeah. Look at the gap.
Yeah, and I, this is just greed coming in. This is
Yeah.
like I analyzed this perfectly. The sellers came in. I hit my risk to reward, and I did not take my profit. What I should have at least done
Oh
is
man.
put a hard stop to get me out at my 1 to 3 risk
Yeah.
to reward.
Well, that's
But
what.
I ended up only making like 12% on this trade, and I was up like awesome.
Oh. You know.
So this is just bad. I think if it got out, I got out. Let me see if I can get you a time. I got out on 11, exactly on the 11 a.m. candle, and I think my fill was around like 4:13:40.
Yeah.
Um, but
Yeah.
still,
Yeah.
this is what I'm talking about.
Yes.
This is what will slowly eat away
Your
at
profit.
you know, at your profits, because this is a situation where if you analyze the market correctly, you should not be taking such a
Yeah.
small winner on
Yeah.
it. You need to reward
Well.
yourself. You need to pay yourself when the market makes these profits available to you. And this is just an example of greed.
Yeah.
Of greed.
Yep.
Slipping in there.
Well, this is the thing, Darren, and that's why this was our goal today on this webinar, was to break down. And once again, guys, I don't know if you guys are going through this, right? But if you're not, be aware of where you're trading for thrill instead of excitement, right? Because think about it. This trade could have, say this trade went all the way down to end of day and Darren caught a massive move. Now his next trade, he would have been conditioned to, for a 400% winner, right? So it's like, is it wrong to hold this trade down to pre-market low? No, but be aware of once this aha moment. This would be the aha moment right here. This is the point.
Yeah, exactly.
This right here is the point where conditions have just changed entirely. This break below pre-market low, and then right here, extremely bearish. Right here, extremely bullish. Everything just changed. So it's like, and look at the volume on that candle. It's insane. So it's like,
I should have been out there.
yeah,
That was a great opportunity for
and
me.
that's when we talk about the tunnel vision, right? And the subjectivity where it's now to the point where we cannot think properly when we're holding trades. You know what I mean? Would we say, Darren? You never get smarter once you enter a
Oh
trade,
yeah,
right, Todd?
you're always dumber. You're always dumber
Yeah,
when you got money on the table.
When there's money on,
that's it.
it's like anytime there's money on the line, or anytime you're balls deep in a 400% winner or whatever, or even a 20%, 30%, you cannot think straight. I mean, look at this. It's so clear to sit here and go, what? Come on, bro. But at the same time, becoming aware of this is a strength. Becoming aware of trading for the thrill is a strength, because now next time Darren's in a short and he sees this, he's going to be like, hold on, why am I in this trade?
That's it. Yeah.
Why am I holding through? That's a lot of buyers. At what would I go long right here? And 100%.
No, I'm not even.
Yeah.
Because I really believe in pre-market low on
Yeah.
Monday.
Well,
So,
and not only that, this is just such a clear example of large money taking control of conditions. Like, it's
yeah.
unorthodox. Look at the candle; it's huge. It's mad volume. It's just a clear. I mean, look at the volume we got at the same level, right? Like, this is obviously it's always easy to look back and see, but this right here is, and that's just what I want everybody to work on, is like, at what point does condition shift? This right here, I remember this Dr. David Paul. He was like a Scottish trader. You guys probably seen him on YouTube. He passed away, but he goes, put your entries where the masses put their stops. And what that means is, this candle, there's a lot of sellers stomping out. A lot. Now, how do we know that? Because the sellers that just went short because it was below pre-market low, right? They were going, oh, dude, it's a Monday, and buyers always defend this, and they're not, right?
Yeah, it was me. Or this was me. I was being a buyer here on Monday, right at the pre-market level.
Right, right,
And then I would stop out here,
right.
and then bam, it shoots back up.
Exactly,
So I mean, I think there was a lot of I think there was a lot of rushed buyers there.
exactly.
Rushed buyers who stopped out.
You're 100% right
Yeah.
on that candle, or the one right after
Not
it.
me, but
Yes.
maybe old. Maybe that would be old.
Right, right, exactly. And that's how you got to think. That right there is what's going to keep you in the present. That's going to keep you in the moment. That right there is what you want, what you need to see. That right there is going to help you make the best trading decisions of your life. Because now, instead of rushing, because this is no aha moment. This is just a double bottom off pre-market low. Right? We don't take these. We wait for structure to break or for an aha moment. So so right here I'm going, okay, prove to me you want it, buyers.
Yeah.
And then right here I'm like, oh shoot, I'm about to go short, baby. And then I see this. Boom. I'm like, oh no, that's what's going on. There's the buy. You know what I'm saying? Like, because we have no idea what's going to happen. We take it candle by candle. We have no clue. The importance here is being aware of not trading for excitement or thrill. Trade for money. I want everyone to write that on their desk. Trade for money. Because if you're looking at a chart and you see this, this is for thrill. This isn't for money. This is because it's pre-market low and there's a couple buyers and you're like, oh, it's worked before, right? Oh, this has worked before. I'm gonna take it. You're gonna get stomped out. And you're going to become the food for large money. So it's like, identify where everyone's stomping out and put your entry there. He also said, David Paul, he goes, grab a brick, put it on your desk. And the next time you want to take, he goes, next time you want to take a long or a trade, pick the brick up and smack your head with it. And then he goes, instead of taking that long play there, put it where you would have stopped out. He goes 9 times out of 10, the price is going to go to where you're going to stop out. And this is the perfect example, bro. Look at that. I don't care who you are, you're stopping out right there if you're long. Look at that.
Oh yeah.
Yeah, dude. If you,
Especially with end of day there, the gap fill, that
yeah,
possibility.
exactly. You're stopping out right there, and then and now you're gonna want to rip your computer off the desk and start beating people with it. When then you see this, we've all been there because then this thing started to rally, dude. Look at that rally. Look at that.
Yeah, and I don't know if y'all look at the futures chart at the same time, but like I said last week, I like to trade hundreds and fifties,
Yeah,
and right where those wicks are, you're at 50,
yeah,
51, 52,
yeah,
and that's what I'm kind of looking at.
yeah.
It's like I definitely don't want to be short here.
Right, right. And now,
Let me check that out.
well, and what that those are areas of value. Those are what do they call those? Psychological levels. Whole numbers are psychological levels, and that was 412.50, which is a psychological. That's a 50. That's a 50 right there. So it's like, because think about it.
Oh, we were above it, basically, is what you're saying.
Yeah, right around it. It's like those.
Yeah.
Think if you are a let's just say you're like a stockbroker, and someone calls you and goes, I want to put my 401k in the S&P 500. Are you gonna and say it's 4 o'clock? Say it's 4 o'clock the day before market just closed. Someone and your job's to put people's 401ks into the market. Okay. Are you and price is right here at 410.70, and then it opens up pre-market. Now the stockbroker is going to find that there's probably a lot of other ends of the orders at 412 at 50s in whole numbers, because most people aren't going, I want to buy the S&P 500 at 412.78, right? They're not doing that. You know what I mean? They're not going, give me a million shares at 412.78. They're going, 412, 412.50. Okay. So you can literally see what's happening, right? Look at and now this guy's putting someone's 401k in, right? It's about 200 grand or whatever, and he's just buying, you know, now he's buying 10 packs. Okay, 10 shares, 10 shares, 10 shares. And once again, this is just hypothetically, right? 10 shares. And then it falls below, and all those sellers get met with buying. Bam. So right here, he was able to buy a 200 pack and finish it up, right? So that's like, once again, bring it back to the auction, right? Because the more you could understand this as an auction, even though that may not be what happened at all, it's just a hypothetical understanding of why price is moving the way it's moving is gonna give you an edge. So great example, Darren. Like, dude, the awareness.
Yeah, right on.
Listen. The awareness is everything, because it's at, like, as you grow as a trader, you don't become emotionless. You just trade for money. Just trade for money. Get rid of the thrill goes away. Think about it, guys. In 5 years, are we going to be super nervous and anxious? And your ideal version of $1 million trader, $100,000 a year trader, he's not anxious. He's extremely equanimous, right? Mentally calm. So he's not trading for thrill. He's trading for money. Now think about it. If you were that person, right? And you were, look at your journal. How many times are you taking 8% winners when you could have been taking 120, right? Like, this is self-development. This is awareness. This is how we actually start to make big money. Like, anyone can learn the strategy. Anyone can learn the edge. Why do 90% of traders fail? And if you want to actually change, this is the behavior you need to identify, and this is what you need to work on, right? It's not, better edge or get better. And what me and Darren were talking, this will increase your win ratio like no other, right? 1-to-3 risk reward ratio. This will, because now this right here, say Darren sold this for a loss. Now, instead of a slam dunk trade that would have paid for 8 of his losers, now he's just made, 8%, and it's affected his state of being, right? Because now maybe he feels down, maybe he's upset, whatever it is, so
Yeah, the point is not to not to be right. The point is to make money. And if we're
yes.
sitting around and waiting all day to be right, and we're like, why am I never right? Why am I never right? That's not the ultimate goal. That's
Right.
really not the ultimate goal. The ultimate goal is to end the week green, to end the
Yes.
month green. And
Yes.
are they going to be weak green or not? That's fine. But the ultimate goal is, if the market has given you money and you're not taking it, you need
Like,
to analyze something about your
look at
strategy
look at
and
that.
figure out what you need.
This is another perfect example here. So I took the market short up here at open print retest and got bit. Um, so I went short right here. Definitely a 1 to 3 profit right here. I had a phenomenal entry on this open print retest. So once again, right here is a from 413 all the way down to 412. I'm sorry, hold on. From 413.53 all the way down. This is a 70-cent move. Definitely 30 to 40%, which I did not make money on. This was a losing trade for me because it rallied into my stop. So once again, like, this would have been a perfect scenario to hit your target and trim. Like, you know what I mean? There's no reason. I mean, dude, I'm fully aware of this pre-market level, this pre-market low, which was just invalidated. Right? So it's like, I should have realized right here that buyers were in control. Instead, I missed this long, and I have to trade for thrill. So what do? Put on the first trade I see. It's so crazy going back and looking at price action and realizing what was going through my mind. Because that's what happened right there. I realized subconsciously buyers were in control here, and I missed it. I missed this setup. So then I was like, oh, what do we used to call this, Darren? I was like, oh, here's a way I could get in the market, and just put on a trade. Even though I had a strong feeling buyers were still in control here, I was willing to live a predictable future of losing because it was in front of my face, trading for the thrill. It's like,
I think it's wanting to be right. Like
yes,
the more that we learn about the market, we see something that we're doing, and it's like, oh, I read about this somewhere.
yeah,
That's fine. I can
yeah,
do it.
yeah,
And it's like, okay, just because you learned it doesn't mean you can now use it to validate any behavior in the
yeah,
market.
right.
It has to be
Well,
more calculated than that, and that's why everything we learn is a double-edged sword. And this is why we try to keep it simple, because the more you know, the more you can justify
yeah,
any behavior that you
yes,
think in the market.
yeah,
And that's not. We all know that that's not
yeah,
conducive
yeah,
to long-term consistent trading.
yeah. It's just like my goal this week, as we wrap up here, is to not trade for excitement, right? Like, you just see pre-market low get invalidated, right? And you missed it, right? I don't need to put on a trade here just because this is an open print retest. You know what I'm saying? Like, let's just be aware of the trades we take and why we're taking them, right? Be okay with sitting back, right? Like, do a little trade fasting. Don't trade Monday. Don't trade Tuesday. Like, bro, get in control of you again. And that's my overall goal this week is obviously lock in profits. If I had my eye on my options contracts chart right here, I could have easily moved my stop down, right? Maybe to this level. And instead of taking a 30% loser, I could have taken at least a 10 to 20% winner, right? Those right there, those base hits is what gets you to consistency. Like that right there, like those right there are why people are living their dreams. This 30% loss on a dumb setup or on a thrill or an excited trade is why most people fail. So just once again, be aware of yourself and stuff like that. So, but
That's really good stuff.
yeah,
I posted in chat here. I posted the risk to reward according to your win rate. Seriously, take a look at this. Go back, look at your trades. This is why we log our trades, obviously. But go back, look at
Give me
the
that
trades
iPad.
that you took, and if you adjusted your risk to reward ratio, what would your hit rate be?
Yeah.
And then make adjustments from there. If you move your win rate, your risk to reward up to 1 to 2, and that causes you to have a 70% win rate, then you need to be taking profits quicker.
Yeah.
That's something that I realized
Yeah.
this week. So I threw that in the chat for the live webinar, but it's also in I believe it's in
Trader chat.
Can't remember the chart. It's in resources. Yeah, it's in resources.
Perfect.
But yeah, check it out.
Yeah. All right, guys. Well, listen, another week down. Message me if you need anything. Darren, Todd, anybody. Have a great weekend. And I'm going to post this in weekly webinars, right? And let's crush it next week. So I will see you guys Monday.